In 2007, the Sinaloa Cartel faced a logistical problem. They had too much physical cash. The paper bills weighed more than the drugs. Drug trafficking is a cash business. The bills accumulate in basements and safe houses. You cannot wire transfer a pile of paper. They needed a bank. They needed an institution capable of absorbing billions of dollars without triggering alarms. They found HSBC Mexico. The relationship began with a structural renovation. The cartel couriers arrived at the branches with boxes designed to fit precise dimensions. The boxes did not fit through the standard teller windows. The tellers complained. The branch managers did not reject the money. They widened the windows. This was not a mistake. It was an operational adjustment. The bank physically altered its architecture to accommodate the dimensions of illicit cash. Between 2006 and 2009, HSBC monitored $670 billion in wire transfers. $200 trillion in wire transfers moved through the global system unchecked. The sheer volume of transactions provided cover. The cartel deposits were not hidden. They were simply ignored by the compliance algorithms. In Culiacan, couriers walked into branches daily. They deposited hundreds of thousands of dollars in cash. The tellers counted it by hand. The bank's internal systems flagged these accounts. The warnings appeared on screens in London and New York. The executives cleared the alerts. This was the silo method. HSBC Mexico operated as a separate entity. The compliance officers in the US claimed they had no jurisdiction. The Sinaloa Cartel purchased the bank's silence with volume. HSBC charged fees on every transaction. The drug money became bank revenue. But the operation extended beyond Mexico. In the Middle East, HSBC conducted business with Al Rajhi Bank, a bank with links to terrorism financing. The US government had possessed a list of Al Rajhi's terror links since 2001. HSBC's internal compliance team possessed the same list. In 2005, HSBC decided to sever ties. 4 months later, the wholesale banknotes department reinstated the relationship. The profit margins were too high. They shipped $1 billion in physical US dollars to Al Rajhi Bank. The cash moved on pallets. The ultimate recipients were anonymous. This is the function of a correspondent bank. It provides access to the US financial system for foreign entities. It is the gateway. Without a US correspondent account, a foreign bank cannot transact in dollars. HSBC sold this access to entities on government watch lists. The compliance department was understaffed. In 2007, the team responsible for reviewing suspicious activity consisted of fewer than 10 people. They faced a backlog of 17,000 alerts per month. They reviewed the alerts at a rate of 1 every 72 seconds. This speed made verification impossible. It was a rubber stamp operation. They approved transactions because rejection required investigation. The cartels utilized the black market peso exchange. It is a trade-based money laundering system. It turns drug dollars into legitimate consumer goods. A broker in Colombia buys dirty dollars from the cartel at a discount. He uses the dollars to purchase American appliances, fabric, or toys. The goods are shipped to Colombia and sold for pesos. The pesos are clean. The cartel receives its revenue in local currency without a wire transfer. HSBC facilitated the payments for these goods. The bank processed thousands of checks signed by unknown individuals for generic export businesses. The compliance officers saw the pattern: sequential checks, round numbers, signatures that did not match the account holders. They filed reports that went nowhere. Beyond trade, they used bearer share corporations. These are offshore entities owned by whoever physically holds the stock certificate. No names are recorded. This is total anonymity. If you hold the paper, you own the assets. HSBC managed over 2,000 of these accounts in Miami alone. The bank did not know who owned the money. They did not want to know. Know Your Customer protocols were incompatible with this product. An internal email from 2008 stated the policy clearly. The business side is the driver. Compliance is a support function. Profit dictated the risk appetite. The result was a flood of cash into the Miami branch. It became a hub for high-risk accounts from South America. The vault overflowed. The operational security was non-existent. In one instance, a Mexican client withdrew strictly in $100 bills. He did this every single week. The total withdrawals reached $14 million. The explanation on file was construction. No invoices were requested. No site visits were conducted. The Sinaloa Cartel did not just use the bank. They integrated into the bank's infrastructure. They bought the employees. Branch managers in Mexico received threats: plata or plomo, silver or lead. Take the bribe or take the bullet. Most took the silver. The captured managers bypassed the verification screens. They authorized overrides on large deposits. They created the green lane for cartel couriers. This corruption moved up the chain. Regional executives received bonuses based on deposit growth. High-risk money counted towards the bonus targets. In 2008, the CEO of HSBC Mexico was warned. The head of anti-money laundering resigned in protest. He stated the system was unfixable. The resignation letter was filed. The replacement was hired. The wire transfers continued. The bank processed $4 billion in bulk cash exports that year. The system worked efficiently. The money entered in Mexico City. It exited in New York or London. It was washed clean by the wire network. The US authorities watched the flow. They had agents embedded in the cartel. They saw the HSBC deposit slips in the traffickers' safe houses. The cartel cash was a logistical problem. The sovereign debt was a geopolitical crime. HSBC serviced nations under strict US sanctions. They used wire stripping. A standard SWIFT message contains the sender's identity. If the sender is Bank Melli Iran, the US system freezes the funds immediately. HSBC manually deleted the name. They did not just erase the data, they overwrote it. The field for originating bank was changed to HSBC Europe. The American filters saw a friendly transaction. This was not a glitch. It was a procedural standard. Over 25,000 stripped transactions moved through New York. $19 billion in illegal funds entered the US economy. The instruction was explicit. An internal memo warned staff, "Do not mention Iran in the payment field." They prioritized the client relationship over federal law. The client list included the Libyan State Bank. The regime of Muammar Gaddafi required access to US dollars. In London, the bank held $500 million in physical US currency for the Libyan regime. The pallets of cash sat in a secure facility in the UK. The US Treasury designated these entities as threats to national security. HSBC designated them as platinum clients. The revenue stream superseded the terror designation. The network extended to Sudan. While the genocide in Darfur accelerated, HSBC processed payments for the Sudanese transshipment companies. The money financed the militia. They utilized the U-turn exemption illegally. Money entered the US system and exited immediately to an offshore account. It touched American soil for milliseconds. An external auditor flagged the stripped wires. The report described deliberate manipulation of payment headers. The executive response was silence. The report was buried. The head of compliance in London jokingly referred to the department as the Business Prevention Unit. Their job was to facilitate the flow, not obstruct it. The consequences were physical. The chain of custody for the Al-Raji funds linked directly to the 9/11 hijackers. HSBC money paid for the flight training. This is the cost of liquidity. The wire transfer is a weapon. The stripped data allowed materials for IEDs to enter conflict zones in the Middle East. The distinction between narco capital and terror finance is academic. To the bank, it is all liquidity. The source code is irrelevant. The fee is identical. The sheer scale of the fraud attracted the US Senate. The Permanent Subcommittee on Investigations initiated a probe. They demanded the server logs. The subpoena produced 1.4 million documents. The internal emails revealed a corporate culture of calculated negligence. They knew exactly what they were doing. When US regulators sent a request for information regarding a blocked transaction, HSBC delayed the response. They tipped off the Iranian clients to route money elsewhere. The deception was institutionalized. Training manuals instructed staff on how to format messages to avoid the OFAC filters. It was a curriculum on evasion. The Iranian business was worth $4.5 billion in exposure. The executives calculated the potential fine against the guaranteed profit. The math favored the crime. On July 17, 2012, the HSBC executives sat before the US Senate. The committee chair, Carl Levin, held up the evidence. It was not a defense. It was an autopsy. The report was 330 pages long. It detailed every wire stripped, every cartel box accepted, and every terrorist account shielded. The executives apologized. The apology was strategic. They admitted to the facts to avoid the trial. A criminal trial would require a guilty plea. A guilty plea revokes a bank's charter. If the US charter is revoked, the bank dies. It cannot clear dollars. It cannot operate. This is the corporate death penalty. The Department of Justice had the gun loaded, but the trigger was never pulled. Attorney General Eric Holder and Lanny Brewer looked at the size of the bank. They saw systemic risk. They feared that prosecuting HSBC would destabilize the global financial grid. They invented a new legal category, too big to jail. On December 11th, 2012, the settlement was announced. HSBC would pay a record fine of $1.92 billion. The media called it historic. The math told a different story. The bank earned that amount in 5 weeks. The record fine was barely a month of profit. It was not a penalty. It was a transaction fee. Assistant Attorney General Lanny Brewer stood at the podium. He admitted they considered the collateral consequences of a prosecution. He admitted the law applies differently to giants. Compare this to the street. If a kid in Brooklyn is caught with an ounce of narcotics, he goes to Rikers Island. He loses his freedom. HSBC laundered $881 million for the deadliest cartel on earth. The punishment was a deferred prosecution agreement. This is corporate probation. No executive went to prison. No board member was handcuffed. They did not even lose their bonuses. The board clawed back some deferred pay, but the wealth remained intact. The message to the financial world was clear. Crime pays if the scale is large enough. The fine is simply a cost of doing business, like electricity or rent. The settlement required an independent monitor. For 5 years, a team of auditors lived inside the bank to review the reforms. They found resistance at every turn. In 2013, 1 year after the promise to change, the monitor reported that senior management was hostile to the new controls. The culture had not shifted. Why would it? The stock price recovered. The dividends were paid. The reputational damage was temporary. The market does not care about morality. It cares about yield. The deferred prosecution meant that if they broke the law again within 5 years, the DOJ could reopen the case. Violations continued. The case was never reopened. This established the settlement cycle. Banks break the law, pay a fine, admit no wrongdoing, and repeat the process. It is a legalized protection racket. The victims of the Sinaloa Cartel, the tortured, the murdered, the families destroyed, received $0 from the settlement. The money went to the US Treasury. The government did not stop the crime. They monetized it. They took their cut of the narco profits and called it justice. The corruption was not isolated to Mexico. In 2015, the Swiss leaks exposed the Geneva branch. Hervé Falciani leaked the data of 100,000 clients. The files revealed arms dealers, blood diamond traders, and dictators hiding $100 billion. HSBC provided them with bricks of cash to avoid taxes. The pattern is identical. Mexico, Iran, Switzerland. The geography changes, but the mechanism remains constant. The bank is the lung of the black market. Without the bank, the cartel is just a warehouse full of paper. Without the bank, the dictator is just a thief with a localized currency. The bank provides the alchemy. It turns blood into assets. It turns crime into real estate. It turns terror into liquidity. Since the 2012 settlement, HSBC shares have remained a staple in pension funds. If you have a 401k, you likely own a piece of this operation. The market has priced in the crime. Investors do not sell the stock because of money laundering. They buy it because the laundering generates fees. This reveals the fundamental truth of the global financial system. Morality is a friction cost. It slows down the velocity of money. To be efficient, capital must be blind. It must not see the source. It must only see the destination. HSBC achieved perfect blindness. We call this a scandal. The bankers call it a service. The too big to jail doctrine proved that the service is essential to the state. If the government destroys the bank, they destroy the dollar clearing system. They are held hostage by the monster they created. The fines are merely a tax. HSBC paid the $1.9 billion and continued operations. The Sinaloa Cartel continued operations. The drugs still flow. The only victims are the ones who cannot pay for the exemption. The small business owner is audited for a $600 error. The giant washes billions with a handshake. This is not a failure of the system. This is the system. It was built to extract value, concentrate wealth, and protect the architects. We want to believe there are rules. We want to believe that if you finance murder, you go to prison. The HSBC case proves that this is a fairy tale. There are two sets of laws, one for the people who use money and one for the people who create it. You are in the first group. The next time you walk past a branch of a global bank, do not look at the logo. Look at the foundation. It is not built on granite. It is built on the silence of the regulators, the complicity of the executives, and the indifference of the market. The money is clean now. The history has been washed away. The only thing that remains is the profit. And in the end, that is the only language the world truly speaks.